Welcome back to another deep dive. Today, we're tackling something really important, especially if you're working for yourself. We're
Yeah,
talking self-employment tax. For freelancers, contractors, small business owners. It can seem kind of confusing.
it definitely can.
So our mission today is to, unpack it. We want you to get a really clear picture of what it is, how it works, and maybe uncover a pretty key deduction along the way.
Yeah, that deduction is important.
Exactly. We'll use some solid examples to make sure it all sinks in. But first, before we really jump in, just a quick reminder. This deep dive, it's based on material from Farhat lectures. So all the
Okay.
content, the examples, everything we talk about today, it comes straight from the resources over at farhatlectures.com. So if you're an accounting student, maybe studying for the CPA, or even a working professional,
Hmm.
definitely check out the website. They've got more practice questions, video lectures, loads of support to help reinforce what we cover here. Big thanks to Professor Farhat for providing all this great material.
Absolutely, great resource.
Okay, so let's get into it. Self-employment tax. What what actually is it? Is it like a totally separate tax, or is it connected to things we already kind of know?
Yeah, that's a really good place to start, actually, because self-employment tax, it's not entirely new. It's basically an extension of FICA taxes.
FICA, Social Security and Medicare. Right.
Exactly. Social Security, Medicare. Now, the big difference when you're self-employed is, well, you're not an employee in the traditional sense. You're the owner.
Okay.
So that means you're on the hook for both sides of those FICA taxes, the part the employee usually pays and the part the employer usually pays.
Ah, okay. So you're covering the whole thing yourself.
Pretty much, yeah.
Yeah.
It's your way of contributing to Social Security and Medicare when you're your own boss. And this applies to, a whole range of people, freelancers, independent contractors, anyone running their own small business. Basically, anyone who isn't getting a regular W-2 paycheck where taxes are withheld automatically.
Right, so you'd be reporting income on like a Schedule C.
Yeah, exactly. Schedule C, profit or loss from business. That's where it typically shows up. And just to give you the main number up front, the total combined rate for self-employment tax is 15.3%.
15.3%. Wow. Okay, so that confirms that you're essentially paying double what a W-2 employee pays for FICA out of their check.
That's the basic idea, yes.
That 15.3 sounds pretty hefty. Can you break that percentage down for us?
Yeah.
And talk about any limits or, thresholds?
So the 15.3% breaks down into two pieces. There's 12.4% that goes towards Social Security,
Okay.
and then there's 2.9% that goes towards Medicare.
Right. And for a regular employee, it's half that, right? Like 6.2 and 1.45?
Exactly. 6.2 for Social Security, 1.45 for Medicare, and then their employer matches that same amount. So, yeah, self-employed folks cover both halves. Now, about those limits, this is really important,
Yeah.
especially for Social Security. There's something called a wage-based limit, or
Right.
sometimes just called the cap. For 2024, that cap is set at $168,600. What that means is, once your earnings go above that amount, you stop paying the Social Security part of the tax on any further income.
Ah, so there's a ceiling for the Social Security piece.
Correct. But, and this is critical, that cap changes pretty much every year. It gets adjusted for inflation. So you always need to check the current year's number.
Yeah.
Don't just assume it's the same.
Got it. So check the current year's Social Security cap. What about the Medicare part? Does that have a cap too?
Nope. And that's a key difference. For Medicare, there's no income limit. That
Yeah.
2.9%, it applies to all of your self-employment earnings, no matter how high they go.
Okay, no ceiling on Medicare.
Right. And there's actually another layer for higher earners. It's called the additional Medicare tax.
Additional.
Yeah, it's an extra 0.9%. It kicks in once your self-employment income goes over certain thresholds. For single filers, it's $200,000. For married filing separately, it's $125,000. And for everyone else, it's $200,000 too.
So on top of the 2.9%, some people pay an extra 0.9% on income above those levels.
Exactly. It's in addition to the standard 2.9% Medicare tax. Oh, and one more really practical point. This whole self-employment tax thing. It only actually applies if your net earnings from self-employment, so your profit after business expenses, are $400 or more in a year.
$400. That's the threshold.
Yep. So let's say you did a little side gig, made maybe $300 profit for the whole year.
Okay.
You actually wouldn't owe any self-employment tax on that. It's only once you hit that $400 profit mark that these taxes kick in.
That's good to know. Okay, so paying both sides, the 15.3%, it does sound like it could be a bit of a burden, right? Especially when you're starting out.
It can feel that way, definitely.
But I think I remember hearing there's sort of a silver lining, something that helps offset that. A deduction, maybe?
You're absolutely right. And this is like a really crucial point for anyone self-employed. Even though you pay both halves of FICA, you get a pretty significant tax deduction because of it.
Okay, tell me more.
You can deduct one half of your total self-employment taxes paid. And you deduct this amount when calculating your adjusted gross income, or AGI.
AGI, right. That's your income before certain deductions. So lowering your AGI is usually a good thing for your overall income tax bill.
Exactly. It can lower your overall income tax liability. Now, the way this is often calculated on the tax forms can look a bit, well, weird. You'll see this number, 0.9235.
Yeah, I think I've seen that, 92.35%. What's that about?
Right. So what happens effectively is that only 92.35% of your net self-employment income is actually subject to that 15.3% self-employment tax rate.
Okay. Wait, 92.35.
It's not just random. It's basically the IRS's way of building in that deduction for the employer half of the tax up front, at least for calculating the SE tax base. Think about the employer's share of FICA. It's 7.65%, right?
Yeah, the 6.2 plus 1.45.
Exactly. So 100% minus that 7.65% employer share equals 92.35%.
Ah, okay. So they're saying, we know you're paying the employer part, so we'll only tax 92.35% of your profit for self-employment tax purposes.
That's the logic. It's designed to create some parity, between self-employed individuals and employees whose employers pay half their FICA. So while you still contribute the full 15.3% on that adjusted base into the system, this calculation effectively gives you credit for the employer portion you're covering. It's a really key benefit.
That makes so much more sense now. It's not just an arbitrary number. Okay, this is where it gets interesting. Let's try an example, put some real numbers on this. We've got Michael, an engineer, who also has a part-time consulting gig in 2024.
Great idea. Examples really help solidify this stuff.
Okay.
Let's look at Michael in a couple of different situations. Okay, scenario one. Michael has a high salary. Let's say Michael makes $200,000 a year from his main engineering job. That's his W-2 salary.
Okay, pretty good salary.
Yeah. And on the side, his consulting business nets $30,000 profit. That's reported on his Schedule C.
Got it. $200K salary, $30K consulting profit.
Right. Now, remember that Social Security wage cap for 2024, it's $168,600. Since Michael's $200,000 salary is already over that cap, he's already paid the maximum Social Security tax for the year through his regular job.
So he doesn't pay any more Social Security tax on his consulting income.
Exactly. He's already hit the limit. So zero additional Social Security tax on that $30,000.
What?
But Medicare is different, remember. No cap.
Right. No cap on Medicare.
So Michael does owe Medicare tax on his $30,000 consulting profit. That's $30,000 times the 2.9% rate, which comes out to $870.
Okay, so he still pays the Medicare piece.
Yep. And wait, there's more. Remember the additional Medicare tax?
Oh, yeah, the extra 0.9% for higher earners.
Right. We need to look at his total income. His $200,000 salary plus $30,000 consulting profit is $230,000. Assuming he's a single filer, that's over the $200,000 threshold.
Ah, okay. So he owes that too.
He does, on the self-employment income part. So $30,000 times 0.9%, that's another $270.
Wow. So even with a high salary covering the Social Security max, the consulting income still triggers Medicare and potentially the additional Medicare tax.
Precisely. Okay, now scenario two. Michael has a lower salary. Let's change his main job salary. Say he makes $80,000 a year as an employee.
Yeah, $80K salary.
And he still has that $30,000 net profit from his consulting business.
Got it.
His $80,000 salary gets hit with the regular FICA taxes, split 50-50 with his employer, no issues there. But now his total earnings, $80K plus $30K plus $30K is $110 tax, are below the Social Security cap of $168,600.
Right. So now the Social Security part of the self-employment tax does apply to the consulting income.
Exactly. So for his $30,000 Schedule C profit, we need to do the full self-employment tax calculation. First, we find the taxable base using that 0.9235 factor.
Okay, so $30,000 times 0.9235.
Right. That equals $27,705.
Yeah.
This is the amount his self-employment tax is calculated on.
Okay, the adjusted base.
Then we apply the full 15.3% rate to that adjusted amount. So $27,705 times 15.3%.
Let's see, yeah.
Comes out to $4,238. That's his total self-employment tax liability in this scenario, covering both Social Security and Medicare on his consulting income.
Okay, $4,238. And just to be clear, that 0.9235 calculation already baked in the equivalent of the employer half deduction for SE tax purposes, right?
Correct. The other way to think about it, which sometimes helps, is calculate the tax on the full $30K first. $30,000, 15.3% equals $4,590. Then you can deduct half of that for income tax purposes. $4,590, $2,295. That deduction reduces his AGI. The $4,238 is the actual SE tax owed.
That really makes it concrete. Seeing the numbers for different scenarios helps a lot. So, pulling this all together, what's the big picture for someone listening who's maybe just starting out freelancing or already running their own show? What are the key takeaways?
Yeah, connecting the dots. I think there are a few really important things. First, understand that self-employment tax is fundamentally how you contribute to Social Security and Medicare when you work for yourself. It ensures you're building credits for those future benefits.
Right, it's not just disappearing into thin air.
Exactly. Second, yes, the 15.3% rate looks high compared to the employee rate, but that deduction, being able to deduct half of the SE taxes you pay from your AGI for income tax, is a really significant balancing factor. Don't forget about that benefit.
Definitely a key point.
Third, those income limits and thresholds are super important for planning. Knowing the Social Security cap, knowing there's no Medicare cap, knowing about the additional Medicare tax thresholds, that helps you estimate what you'll owe.
So, you're not caught off guard at tax time.
Precisely. And it helps with cash flow planning too, because usually you need to make estimated tax payments throughout the year to cover both income tax and self-employment tax, since nothing's being withheld.
Right, quarterly payments become really important.
Absolutely. So understanding these calculations beforehand is key to managing those payments. Ultimately, getting a handle on these rules isn't just about compliance, it's about empowerment. It helps you make smarter financial decisions for your business.
That makes sense. It affects how you price things, how you save.
For sure. It becomes a known part of your financial landscape, not just a scary unknown tax.
So here's something to think about as we wrap up. Knowing that you pay both the employee and employer parts of FICA, but you also get that deduction, how might that influence the way you think about setting your rates or maybe your financial goals if you're self-employed? And with that final thought, that brings us to the end of this deep dive. Thanks so much for joining us to navigate the world of self-employment tax. Hopefully it feels a bit less complicated now.
Yeah, hope it provided some clarity. It's always good to dig into these financial topics and, keep learning. It really pays off.
Couldn't agree more. Until next time, keep exploring, keep asking questions, and join us again on the deep dive.